All right, no intro, no outro, straight fire. All right, so let's get into this week's YouTube. I'm not doing a weekly outlook, I'm not doing a weekly recap. This YouTube is why every trader needs a journal. And again, using Google Gemini to finding your edge. But before we get into that, let's get into the verse of the day. Here I am, I stand at the door and knock. If anyone hears my voice and opens the door, I will come in and eat with that person and they will with me. Revelations 3:20. All right. So boom, like the title of my video says, why every trader needs a journal using Google Gemini to find your trading edge. So before we get started, I want to give a huge shout out to my mentor Emilio. This is his whole journal interface. He's the one who introduced me really to the importance of keeping a structured trading journal, and I still use the Excel trading journal that I got from him to this day. It's been over a year, and that's literally how I track my trades. So having a quality journal has completely changed the way I analyze my trading. So again, shout out to Emilio. As you can see, I'm on my 100 trade run tab where I literally am taking 100 trades and using Google Gemini to pretty much track my performance. Right now we're at the 50% mark, halfway through. Took my last position on the ninth. All these positions right here that don't have anything in there, they're pending orders. So again, like, now let's talk about something that separates, again, profitable traders from traders who stay stuck, right? So journaling. Most people think that trading is all about finding the perfect strategy, when in reality is not. It's preservation of capital. The strategies get you into trades, but your journal is what makes you a better trader over time. And luckily with AI, you can virtually plug anything into AI or use the AI interface. For me, I use Gemini since I have a PC that like helped me out a little bit. So today, I'm going to show you how you can pretty much take your trading journal to the next level. I'm using Google Gemini Workspace to analyze your trading data in ways that would normally take hours. Again, I don't know how it is for Mac. I'm a PC user, but that's just what it is. So why journaling really matters. So again, here's the reality. Most traders remember their wins. Most traders forget their losses. But your trading journal essentially doesn't lie. It's your track record. So when you journal every trade, you're creating a database of your own habits. So you're documenting entry price, exit price, risk to reward ratio, win or losses, times of day of trade, trading session, market conditions, emotions before and after the trade, whether you follow your rules, screenshots of the setup, etc., etc. And then over time, these little pieces of information become incredibly valuable, because trading isn't about, again, one trade. It's about hundreds of trades. It's about preservation of capital. So the power of data. So in my case, I'm taking 100 trades, and in reality, I only taken 50, and I still can't remember all 50 trades. So like you're probably not going to remember all the trades, but you can journal. So your journal can tell you things like what's your actual win rate, what's your average risk to reward, your currency pairs that make you the most money, what pairs consistently make you lose, what days of the week do you trade best, what time of the day are you most profitable, are you more successful with buying or selling, which is actually a thing, and how often are you breaking your rules, and are your losses caused by bad analysis or poor discipline. So these are all questions most traders never answer, and because they never answer them, they never improve. So where Google Gemini or Chat GPT or Copilot comes into play, as you can see on my screen, I have my Excel. This is my trading journal. Again, shout out to Emilio. And then right here on the right is Gemini Workspace. You can download Gemini Workspace. With the new updates for the Windows, it comes automatically. So this is where things get a little bit interesting. So instead of manually looking through hundreds of rows of Excel spreadsheets, so I simply upload my trading journal into Google Gemini Space. It really just does it for me. So it summarizes the data, and I don't really start with questions or prompting because it does it automatically. So if you don't want to do the automatic and you just want to extract your Excel spreadsheet and drop it into Copilot, Chat GPT, whatever the case may be, some questions that you can ask AI is like, what are my biggest, weaknesses? Which trading sessions have the highest win rate? What patterns do you notice in my losing trades? When do I overtrade? What setups have high expectancy? Calculate my average risk to reward, which months perform the best, what emotion notes appear before my biggest loss, and it does all that within seconds. So for me, Gemini starts finding patterns that I probably would have never noticed on my own, and is almost like having a trading coach reviewing every single one of your trades you've ever taken. So Statistics that you should be tracking. And again, I'm giving you like fire hosing you a lot of information and kind of like my thought process, and then I'll go over my actual stats with Gemini. So some of my favorite statistics to monitor really is overall win rate. As you can see here, out of the 55 trades that I took, only 30 executed and closed, and my win rate is 26.7%, and I have a 73% lose rate. But here, even though I have a win rate of 26%, lose rate of 73%, my net realized risk to reward ratio is 22.08%, meaning that even though, my win rate is shit, I'm still overall profitable. Why? Because my average risk to reward, it says it right here, is 5.51 risk to reward, with my peak risk to reward being a 13% run, which is it was a good run. And my average loss, this is it right here. My average loss is 1%. All right. So overall win rate, average R multiple, average winner, average losers, profit factor, expectancy, maximum drawdown, consecutive losses, consecutive wins, best trading day, one of the best trades to not trade based off of your data, most profitable setup, least profitable setup, rule following percentage, things of that nature. Literally all are statistics and data that tell a story. So again, the goal isn't just about making money. The goal is understanding why you're making or losing money. So the emotional side to journey, which is right here, this column for me, where you kind of like, was I afraid? Did I get in? Did I not get in? Did I move my stop loss? Did I hesitate? That kind of gives you the back office of your emotions. When you're emotional, do you take bad trades? When you're not emotional, do you take good trades? So the thing I like about AI is AI can be objective. So it doesn't care how I feel. It doesn't care if I think I'm a good trader or not. It's simply analyzing the data. So sometimes it tells me you consistently lose after your second day of trading, or your London session trade. I don't really trade London, or I don't really change the sessions. I just kind of trade 5 p.m. every day. Your highest win rate occurs on Tuesday, Wednesday, Thursdays, after waiting for confirmation. So again, if you're serious about becoming consistently profitable, stop obsessing over finding another indicator, stop buying another strategy. Instead, become obsessed with understanding yourself. Your journal is one of the most valuable tools that you'll ever have as a trader. And when you combine the detailed trading journal with AI tools like Google Gemini Workspace, Copilot, ChatGPT, you can virtually uncover patterns impossible, improve your discipline, and make data-driven decisions instead of emotional ones. So again, let me run down some of my statistics. And again, I'm doing 100 trade run. I'm halfway through. So I'm like, all right, let me see what my dad is telling me. So again, total trades 55. I executed trades closed 30. I got 8 wins, 26.6% win rate, losses 22, 73.33 loss rate, net risk to reward, net positive 22%. My average win size is 5.51, with the peak being 13.29 risk to reward ratio. And then this is it right here. This is the biggest one. Average loss size is 1%. So key insights and strategy analysis, the power of high risk to reward, which is the purposes of my strategy, because I'll be holding these suckers for a very long time. So Gemini says, even though your run rate is relatively low, your overall performance is highly profitable. This is because your average winning trade is 5.51 risk to reward and is more than 5 times larger than the average loss, which is 1%. This demonstrates excellent trade holding discipline, a strong structural setup that yields high payouts when they go in your direction. Margin and capital allocation constraints, miss opportunities. So a lot of my missed opportunities, those trades that were not executed, is because of margin and capital allocation constraints. And that's just based off of my broker. Like with trading a regulated broker, you can absolutely get margined out. And once you get margined out, it's like, all right, like you can't take another trade. So around June 25th, I missed one entry. I missed out on entering approximately 9 trades because I was in too many active positions and not have enough margin. So the missed trades, and this is where I was like, whoa, this is big. The missed trades had a combination projected risk to reward of 78.4, including high potential setups like NZD USD with 17% and USD CHF with 13%. So this is something that I have to watch out for. If I have like an A plus 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 setup, forget all the little small ones, aim for the high risk to reward trades. All right. So I have a clear correlation between discipline and profitability. So when I follow my rules, it's successful. When my rules were bypassed, several trades, you noted that trades resulted in a -1 risk to reward. So actionable tip. Your data proves that your filter rules is a good addition and highly accurate. So, just paying attention to my rules. Accounting for spread. So I noted you noted getting stopped out, hit out prematurely due to spread on multiple trades. So when trading cross pairs or during high volatility seasons, consider adding a small spread buffer to your stop loss in order to prevent getting wicked out, or correct moves before the pairs move in your favor. So these are all things that AI helped me identify, that now with my next 50 trades, you know, I can kind of tailor my trading to it a little bit. So I'm telling you, use AI, right? Use AI. AI can't trade for you, at least don't trade for me, but it can definitely show you where your shortcomings are. All right. So yeah, with this, these are like all my trades from May, April, July. I didn't take any because I'm on my 100 trade run. So yeah, man. So all in all, if you found this video helpful, make sure you hit the like button, subscribe to the channel, and turn on your notifications so you don't miss future trading content, which I have been not consistent, but it is what it is. Again, I'd love to hear from you. Drop a comment below and let me know, do you currently use a journal for your trades? And if so, what platform or spreadsheet do you use? And thank you for watching, and I'll see you again on the next video. No intro, no outro, straight fire. Peace.